Hello, good afternoon, everybody. So today's webinar, as we said morning, we're going to look at how we can combine price action to indicators. So I would like first of all to define exactly what price action is before I look at what indicators are, and then we're going to look at exactly what indicators can we combine with price action to come up with a very good result. So the first thing, anything that deals with the chart alone, anything that deals with the chart and there is nothing added to this chart is actually called price action. Somebody can also call it as can also refer to it as the technical standpoint. But anything that is in this chart, if I'm not adding anything to the screen to help me understand what is happening, then it means I'm actually trading price action. So you can also call that technical trading, but what it does is basically I'm looking at what the candles are saying. If this is the candle, I understand first of all what it means. What is this candle? This is a pin bar, and in this case this is a bullish pin bar. It means that we are heading to the upper side. And if the price proceeds down and we see this, then this is what is known as a bearish pin bar. Then the price proceeds down, we have this, and then it comes back and you have something like this. This is also called a pin bar. It's a pin bar. So anything that deals with the chart and there is no other thing to help you understand what is happening other than the candlestick on your screen, then that means you are trading price action. So price action is basically what the chart is saying, not what the indicator is saying. An indicator is like something that understands the chart, what the chart is saying, and then puts for you the results on the screen. So there are several things we're going to look at this webinar. So far, you can remember like some few weeks ago, we looked at what pin bars are, by defining exactly what pin bars are, and then we moved forward and looked at engulfing candles. Then we also looked at inside bar candles. Then we illustrated partly how to combine inside bars and pin bars and engulfing candles to indicators, but we didn't look at it the same way we want to look at that today. So the first thing which I'll mention is that price action trading actually has something to do with what the levels are saying and what the candles are saying. So that means you need to understand exactly where your levels are in the market. So before, if I'm looking at this chart, I said this is a resistance, and the reason I'm saying this is a resistance because there was a big move downwards and price came back up but could not close above this, acted as a resistance, and it continued down. It came back as a resistance, then it continued down, and we are yet to see price come back to the same point. So whatever I'm doing now is basically I'm looking at the chart and trying to understand what the chart is saying so that I can pick a trade or exit a trade. Such an analysis is called price action trading. So anytime you're looking at your chart and you get results from exactly what is happening on the chart, that means you're doing price action. But if you add an indicator, for example, to add an indicator, you go to insert, then the first option should be indicators. Then you go to any just trend or MACD, whichever. This is an indicator. This is a sample of an indicator. So this is called MACD. How it works is this: we have like the green bars you're seeing, which is this, these are actually referred to as the columns. Then there's the red line, which is this. This is called the signal line. And then other than that, we have a level, which is this in between. You can see that there's some invisible line here. I can make it visible. Just a second, let me mark it 0, 0. I'll add it, level 0, 0. So just a second. Added, so you can see that we have some thin line here, which is actually separating the columns on top and the columns on the lower side. So those are just the components of MACD. And how it works is this: anytime you have the columns of MACD, which is this green bars, anytime you have them below 0, 0, it means that the price is continuing to the lower side. And that lower side must be supported by the signal line, which also must be below 0, 0. So that means we started seeing sell signals here, but then the best time to enter is after the red line actually crossed below 0, 0. So that was on this red bar, green bar, this one. Yeah, this was the place to look for a sell from here. So despite the fact that the sell started off when this happened, we actually only took a sell when the signal bar went below 0, 0. And after continuing downwards, it came back like this, and then there was this column for MACD actually rose above 0, 0. Then after some times, the signal line also rose above 0, 0. So after the signal bar rising below above 0, 0, that's the time you begin looking for a trade. So that has to be confirmed. That's how MACD works in the best way. There are two lines. There's the signal, then you also have the columns. So both of them must cross either above or below 0 to say that this is now a trade, or we are somehow heading towards this direction. So whoever uses this to enter trade is actually relying on the. So there are several indicators. This is just one sample indicator. That we have a lot of indicators. There are very, very, very many. Just a second. I would like to display my screen first so that we are able to see what I'm saying. So in my screen, you can see my chart now. You can see that under the insert option is these indicators. Then all these are indicators. We have the first one, second one. So the first list, which is this, all this. These are how many? 1, 2, 3, 4, 5, 6. The first 6 indicators which you are seeing, these are the last 6 indicators that you used before. And then if you want to add the specific indicator, if they are not listed here, and come back here, then you can find if there is a trend indicator. We have tons of them. There is this. It's called average directional movement index. Then we have to add another one. We have this. This is another trend indicator. All these are indicators that are actually showing you the trend. If you want to trade indicators correctly, be sure to understand price action also. So don't find yourself trading just because an indicator is showing you a sell. What the indicator does basically is to illustrate what has been happening. Understand what has been happening and then display the information on the screen. It does not in any way predict what will happen in the future. So whatever can do that is just price action. We can predict that we are still going downwards or we are continuing to the upper side. So as you can see this, we had this called Bollinger Bands. There was an active downtrend. From this point, price went down and then there was some slight consolidation. The same thing happened here, downward. So both of them, there are 3 lines, this, and this. At the same time, when this was showing us a sell, we actually had the MACD also show us the same thing, the same sell. So I'm not saying that if the MACD is showing you a sell, you're actually supposed to pick a sell. No. Understand first of all what is happening. Charts clean first of all, then use the indicators to confirm the direction that you are seeing from price action. So if I wanted to understand what was happening here, I would basically just have everything from the price action standpoint. First of all, draw a line as this resistance, then I'll also draw this and then mark this as some range. Then I will say that anytime price gets above this, I pick a sell. Anytime price comes down to this support, I pick a buy. So to add an indicator to this, I'll use an oscillator. So already I've understood very well that I'll only be selling when price gets here, buying when price gets here. So whatever is happening now means that price has to come back up to this resistance so that I pick a sell from that point to the lower side. That's what I expect to happen based on price action. I'm waiting for price to get, just a second, let me scroll back. So what I expect to happen is for price to come back from this level here and get up to this resistance. This is what I'm waiting for. So already I have some informed opinion that price needs to rise up to around 80.5856 so that I can pick a sell. But instead of selling it immediately, wait for this line. The two lines you're seeing, these are actually stochastic line. This is the main line, the green one, and then the dotted one is actually the signal line. Anytime you have both of them above 80, it means the market is overbought. And anytime you have both the line, this and this, below 20, it means the market is oversold. So that's a good time to look for a buy. Above is a good time to look for a sell. To combine these two, price action and what the indicator is saying, I wait for price to reach here while indicator is also above 80. This is the correct time to look for a sell. So you're not just selling because the indicator is showing you a sell. You are selling because both price action and what the indicator is showing you are actually the same thing. Both of them should support each other. If you find that one is showing you a sell and another one is showing you a buy, then there's something missing. There's also something called divergence and convergence. I'm going to look at it later, but not today. If you understand the concept of divergence and convergence very well, you'll be able to understand what I'm saying. At any time you have price moving up, but the indicator is moving down, then it means that price is likely changing direction in the near future. So if you have price moving up, but the indicator is moving down, just know that price is likely going to change direction in the near future. We are likely going to see a reversal. So those are some of the things you need to check for exactly when you want to trade. You want to combine an indicator with price action. Know very well that sometimes these two may move in different directions. So when price is moving up, like from this point to this point, notice the same thing was happening with the indicator. While price was moving from this point up to where the price is now, the same thing was happening with the indicator. So we expect the same cycle to continue, because what this indicator basically does is it is drawn based on what the price is doing. They actually understand what this price is doing and then put it in a visual manner so that you're able to see it. Sometimes this could be happening. The price could be moving up, and instead of the indicator moving up, it actually goes down. And as I've mentioned just some few minutes ago, that means that price will likely change direction to the lower side. So you better be preparing for a sell, and especially if price hits a major resistance. So somebody would say that you're buying when this is showing you a buy and selling when the indicator is showing you a sell, but that's not always the correct way. You'll find that if you sell here, price may proceed upwards if the indicator is showing the same thing. The best is when both of them are showing you that if this is overbought and this at a resistance, you sell both of them. You sell the pair. So let's move back to the past. We have this level here. This is a very good resistance. The first thing I do, you understand your charts from the resistance, like the price action point of view. First of all, understand this as a resistance. Continue down, it came back as a resistance. Continue down, it came back as a resistance. So instead of selling this one immediately, the only place I could have sold here was this, the last time. This is the only time I could have taken a sell. When price got back to this level the third time, this is the correct time to look for a sell. And the main reason I'm selling this is not because this is a resistance only, but it's because from the indicator which I'm having, we are actually overbought. So you sell when this has happened. Anytime you have a level, then price comes back to that level, then you notice signs of being overbought or exhaustion. Or price comes to this level and then you see a bearish pin bar engulfing pin bars to the lower side, then you know we've possibly changing to the lower side. Also have this level here. We have this a very good support here. This is a very good support from some times back. You can see that actually when price was here, indicator was below 00. This one was below 00. When price was here, the indicator was also below 00. Then price continued up. It came back up to some level here, a support. While price was here, we also had this here as a support. So price continued up, it came back as a support. At the same time, both these two lines, they were not below 00, but they were almost approaching 00. So what we expect to happen normally is if this is a support, then price has gone up. When price is coming back down, when the price hits here, it should be the exact time that the indicator is also hitting the same place, which is this. So if one of them gets back to the line before the other one, then it means price is actually changing direction. So if the indicator, which is this, the first touch was this was the first touch, the indicator moves up and then it comes down up to that level, but at the same time price goes up, moves down. While the indicator is around this level, price is yet to come back. This means that we expect a change to the upper side. That is simply the meaning. It means that the price is likely changing to the upper side. So you're supposed to look for a buy immediately when such a thing happens. And when price continues up, you can see the same thing. Price continues up. Then we have this support. Yeah, have this support continued massively up, and it comes back down to that support. Yeah. Then you also have this. This is also another case of divergence, opposite case. The price is showing us something opposite to what the indicator is showing us. So we expected both of them to get back to the same levels at the same time. We wanted that when price, which is this, when price was moving down, it was supposed to hit this line exactly at the same time when the indicator was actually hitting that line. So this did not happen. This means we are continuing upwards, and this now is a buy. It's a buy. You need to look for a buy immediately when this happens. You're supposed to look for a buy. You expect that buy to push price even higher up to that resistance. So this is one thing. You don't just trade price action alone. You need to combine both price action and what the indicator is saying to get a. Don't find yourself trading indicators alone. That the indicator is above 80 does not mean you are selling it. The same thing must be seen here on the screen before you finally say that this is a sell or this is a buy. If you have this one, just look at this. From this point here, the columns of the stochastic was above 80. We expected price to decline massively, but instead what happened? The price actually continued upwards. The same thing happened here, around this level here. Instead of price continuing upwards, retracing to the lower side, reversing to the lower side, it actually continued massively to the upper side. So that means indicators alone you cannot rely on. You must combine the two. Understand perfectly well where your levels are first of all, and then trade your levels based on what the indicator is saying. Like, look at the indicator in relation to what the price itself is doing, not the other way. Understand first of all that we are heading downwards. Good. Where are you supposed to sell from? Where are you supposed to buy from? You get the major resistance, major support places. And when the price is there, assuming we are at a resistance and the price is at that resistance, check your indicator to see if it's showing you a good sell. If it's showing you a sell, go ahead and sell it. And if you have a support based on price action and the indicator is there showing you a buy while the price is showing you a buy, look for a buy at that time. So definitely you will not be correct 100% at a time, but in most cases you'll find that you've entered trades correctly and at the lowest possible risks. So we check another indicator. So something else which I want to say is that as much as the indicators may not be good, actually they can help you see certain things which you are not likely to see with your own eyes. So something like this, notice we have this. This is a good support here. That's a good support. The indicators below, and then you also have this as a support. So I'll pick one horizontal line from this point, diagonal line, draw it from that point and extend it massively to the upper side, like this, like that. So you have this, then you also have this, then on the lower side you have that, the indicator, and then you also have this, then we also have this. Okay. So if I was to draw a line, draw it like that. So you can basically see that the overall trend from this point is actually upward. So you better look for buy positions. This is one way the indicator can help you to understand exactly that we are actually heading upwards or we are retracing to the lower side. If you have this, that the previous touch was lower, this is higher, and this is even higher, then it means possibly we are heading to the upper side. This did not go to the upper side. This is a wrong one, but normally when such a thing happens, it means we are continuing in that direction. It means that's the most dominant trend. You're supposed to proceed to the upper side. We also have this, just look at this, there's this resistance here. Yeah, this is a very good resistance. Then price proceeded down, and you also had this peak, which is this. So basically you'll draw a line, you draw a line from the top like this, like that, then you check with the indicator. Notice it's just the same thing. What this means is that the indicator, although it may not be everything, but at least it helps you understand what is happening. If you cannot understand this as a higher high, a lower high, and even a lower high, then just know the indicator is showing the same thing. The first time price attempted moving up, it actually hit this level, then continue down. The next time it attempted to continue up, it actually came up to this level here before it proceeded down. Then after that, it broke above. That means a change in trend. We are now heading to the upper side. So this is one way. Other than this indicator, the one which I've made on stochastic, there are another one which is very, very useful, MACD. Yeah, it's MACD, and the reason I'm saying this is very useful is because it actually helps you understand also what's happening on the screen. If you have this, there is this, and there is this, and if you check on the lower side, the same thing, somehow continuing downwards. So what this means, assuming I want to combine this indicator with price action, what the chart is doing, I'll just get to my screen and draw this line there, and I'll say, well, as long as the indicator remains below 0, 0, these columns and the signal are below 0, 0, I'm actually looking for a sell. So the best time to sell is not when the indicator is showing you a sell, but when the price is showing you a sell. The most important thing normally is not what the indicator is saying, but what the price is saying. Because the indicator derives values from what the price is saying, and then it displays that for you on the screen. If you can understand what price is doing, there is no need for confirming it to the indicator. But if you don't understand properly what the price is doing, then you can combine that with the indicator. You can try to understand from the indicator exactly what's happening. So if I was to trade from this point here, I don't understand what's happening, assuming I don't understand exactly what's happening. What I know first of all is that we're in a downtrend. So I rule out the idea of looking for buy positions. And when the price gets above 0, 0, I look for buy positions. I rule out the concept of looking for sell orders. So to sell here successfully, I'll first of all see that there's a sell, but we are moving in a particular pattern. There is this. There is some consolidation here. Then we also have this here. Also have there. So instead of looking for, if I have this drawn on my screen and I know very well the trend is downwards, basically be waiting for price to break below the shape, then retrace back so that I pick a sell. which is here. Or if price maintains the same zone and then I see a bearish engulfing candle, pick a sell, or a pin bar, pick a sell, because the overall trend now is down. So I don't find myself buying anything when the indicator is showing me a sell. This is one way you can weed out wrong trades. Confirm your trades with what the indicator is saying. If you have a sell dominating on the indicator, use your price action skills to look for sell positions. And if you have the indicator showing you a buy, like there's a very good symbol which showed a start, SP500, which is this. Assuming you have this, have the indicator showing you a massive buy. This point here, the price has been moving to the upper side. Have this, it's happening on your screen, that you are seeing when this was happening, the columns of MACD were above 00. You actually ought to have been looking for a buy all through. Don't look for a sell even when there's a bearish pin or whichever pattern you use to look for a sell. Instead, look for things like this. I'll get to my screen and have a line drawn there. Then I refer to this as a support. This is just a very good resistance. I'll now say you have a resistance here, very good resistance, and a sell place. But since the indicator is showing me a buy, I actually wait for price to break above, then retrace back so that I can pick that buy position correctly. So this is, you can combine whatever is happening on your screen with the indicator. Combine price action with the indicator to get maximum results. If you are just trading one, that you're only looking for an indicator, I mean you are buying only when the indicator is showing you a buy, and you ignore price action, you'll get it wrong. So have this, have your level there, then have maybe your candles, maybe the candles you're looking for, then you pick a buy only when that candle has shown you exactly what to do. If you have price moving upwards and there is no sign for a buy, you don't buy it. You don't buy anything that looks like this. And if you have, assuming, so the first time which when this is upwards, I actually could have bought after that pin bar. Then the next buy is actually here. Notice a resistance, and then there's a break above, there's a slight retracement, and then there's a bullish engulfing candle. This is a sign for a buy. You need so as I was saying, if you have this, I basically could have bought after this engulfing candle, then I wait for price to continue up, and then it comes back to the same point, then you pick your second buy. You wait for price to continue up, it comes back down, then you pick the third buy from the same place. So the reason I could not have bought this is because you can see that the indicator is actually now a sell. So this, if you're doing price action, you actually ought to have seen that this is now a buy, because we've been buying from the same level before. If you find that the same level you actually could have bought previously perfectly, then don't hesitate, just pick that buy, ignore the indicator temporarily. But if there was no trade there and the indicator is showing you a buy for the first time, better ignore that one. Because the most important thing normally is not what is happening, it's not what the indicator is saying, but what the price is saying. Because sometimes the indicator could show you a sell, but in real sense the price is actually moving upwards. So you don't want to find yourself selling what is moving upwards, and you don't want to find yourself buying what is moving down. So if price was here and you are buying it perfectly, you better buy it also when it gets back. This is still a buy. And even above, which is this one, is still a very good buy. So technically we would buy it. Would buy it the first time it has gone above, then there's that inside bar, buy it of the inside bar, and then we'll also buy it when that happens after the pin bar, and then we'll also buy it because I was buying it previously, then I'll also wait and buy it here, which now goes wrong. So the fact that this has lost has nothing to do, may not have anything to do with the indicator, but the fact that the price is just moving on, and so you've just lost it. We also have this top, which is this. So this was a resistance. There's a gap above that level. Then after that you see a continuation candle, pin bar. You also have this as a pin bar. What this means is you're continuing to the upper side. So keep looking for buy positions. Keep looking for buy orders. Don't look for a sell if the indicator is showing you a buy and everything is showing you a buy. So if you can understand what I'm saying, you actually could have taken all these trades here, except this which has gone against, and this one also went slightly our way, then this one went against this one. So thank you very much. That should bring us to the end of today's webinar. If you have any questions, just any question in relation to what I've just mentioned, kindly feel free to post them under the chat option, which is this. I'll be able to respond on time. Just post them here, keep posting them. I'll respond immediately. Anytime I see any comment, I'll be able to respond immediately. So thank you very much. See you again tomorrow.